Hey students, welcome to week 6 of Accounting Principles. Hope and pray your day is going great today. We're well into chapter 2 by now, and in fact we'll be finishing chapter 2 this week, and then in week 7 and 8 we're going to jump into chapter 3. This week in chapter 2, we're studying the accounting cycle. We're preparing trial balances, understanding the general journal, and the postings to the ledger. And then we're also going to look at the importance of ethical financial reporting. Now listen, in case you've been hiding under a rock during this course, you know that the theme of ethical behavior has been pretty consistent. It's expected in accounting, right? In fact, even if the textbook didn't emphasize the need to be ethical, God expects us to be honest with other people. And according to Proverbs 20:23, the Lord, that says this: the Lord detests, hates differing weights and dishonest scales. They don't please him. It cannot be clearer. God expects us to be honest in our dealing with financial issues. Do not put yourself in a position of being dishonest in this matter of finances, because God will notice. All right, God will notice. So don't be surprised when this topic of ethical behavior is consistently reinforced during our accounting course. Let's look at the steps in the accounting cycle that are covered in the text throughout this week. First of all, for each accounting cycle, there are 6 steps that need to go through. Usually the accounting cycle is every month. Okay. And first step is analyzing the business transactions from the source documents like invoices, checks we may have received from customers and that sort of thing. So analyze the business transactions, record those entries in the journal, record those transactions in the journal, post the entries to the ledger, and at the same time prepare a trial balance. That's step 3. And then the 4th step is adjusting the accounts in case there's a mistake or there's some late entries that need to be made. And you prepare an adjusted trial balance. That's the 4th step. And then the 5th step is preparing financial statements, those income statements, the owner's equity statement, the balance sheet, the cash flow statement. Prepare those financial statements. And then 6th and final is closing the accounts out and preparing a post-closing trial balance. This really is in preparation of you close off one month and you get ready to start the next month. Okay. Now, for each transaction, there's a 5-step process to put an entry into the journal. All right. So the 2nd step in the accounting cycle was to record entries in the journal. Well, here's how you do that. It's 5 steps of analysis and process to do that. 1, state the transaction. It means write it down. All right. Analyze the transaction to determine which accounts are being affected. Information about transactions comes from the source documents, again, like invoices and checks and receipts, contracts, that sort of thing. 3rd step, apply the rules of the double entry accounting process or accounting philosophy by using those T accounts that we did last week, for example. And in those T accounts, you show how the transaction affects the accounting equation. Remember, for every entry on a debit side, there has to be an equal opposite entry and at least one other accounting. There has to be a debit on one side and credit into another account someplace else. Always double entry. Debits have to equal credits. And then the 4th step in posting journal entries is to show the transaction in the journal form. Now, in journal form, there's a date, there's a debit account, there's a debit amount that are recorded on one line, and then the credit account, that's the other T account that's impacted, and it's indented, at least on the journal form, and credit amounts are shown on the recorded next line. So all the entries are dated and listed. And the entries in the journal are dated and listed chronologically, like as they happen, okay, throughout the month. And then the 5th step in recording journal entries is to provide a comment that's going to help you remember how you applied the rules of the double entry accounting process. Now, in the Canvas materials this week, you're going to find a tab that's labeled Types of Journal Entries. Review that table. There's a table in that tab. It helps you to better understand how each type of transaction is actually recorded in the journal. And it will be helpful for one of the exercises this week as well. Okay, let's jump back to the accounting cycle for just a moment. Remember, There are a number of steps, but the first 3 steps are this. You analyze the business transactions from the source documents. You record the entries in the journal. And then third, you post the entries to the ledger and you prepare a trial balance. Now, this happens just before you create those financial documents of the income statement, the balance sheet, cash flows, etc. Right? Preparing a trial balance is just what it might sound like. It's the last check to make sure that there are no errors before you create those financial documents that are going to get distributed to the owner and the other stakeholders. All right? So preparing the trial balance gives you one last chance, one last check on the transactions before publishing the results. This week, read up on the trial balance. It's in Chapter 2. You'll be preparing a very simple trial balance from last week's exercise where he had to record transactions on T-charts for Michael's computer service businesses, if you remember that spreadsheet that I sent out. All right. Finally this week, we're looking at the process of posting journal entries to the general ledger accounts. All journal entries must be posted to the ledger accounts. Posting is a transferring process that results in an updated balance for each account that's in the ledger. So not only must the dates and the amounts be transferred from the journal to the ledger accounts, but notes that are called posting references also have to go as well. And those posting references set up a map or a cross-reference between the journal and the ledger. 2 different documents, the journal and the ledger, and these posting references connect the dots between the 2 of them, okay? So that all the information is properly traced back and forth between the 2 accounts. Make sure you read Chapter 2, Section 7 on some of those details about that mapping and the posting between the journal and the ledger. All right. We're coming up to the end of this particular section in Business 221A. After this 8 week, we're going to start 8 weeks. We're going to start the next 8 weeks, Business 221B. Make sure right now, though, that you're not coasting. All right. We're not coming down. We're coming down to the end of this course, but you need to sprint to the end. Okay. No jogging to the finish line. It's important that you get this material down before we jump into the next 8 week section of Business 221B. All right. Listen, I'll be available during virtual office hours on Tuesday evening. I moved them to 8 p.m. Mountain Time. Maybe that'll make it a little more convenient for some of you. Contact me with questions, though, all right? Anytime throughout the week. It's okay to struggle some as you learn through this stuff. That's good, all right? But please do not struggle to the point of frustrating and quitting. That's bad, all right? Make sure you contact me with questions or problems that you're having. Listen, I am praying for you guys. I am praying that you'll be open to hear God's calling on your life. And always remember this, that God is on his throne. He's always been there, and he's always going to be there. Thanks, and have a great day.